Hello students, welcome back to Global Online. So this session is for those students who are preparing from the commerce and management background for upcoming December attempt of NTA UGC NET. Because balance of payment is the most demanding chapter in this examination, I have come up with the very important MCQs on that topic. So it will cover your concept as well as it will boost your confidence to solve the questions on that particular topic. Clear? So I suggest each and every students please watch this video till the end, okay, because I am going to explain these MCQs in the detailed explanation. Clear? So this is first question on your screen. The question is asking about the balance of payment definition. That means the correct option which defining the balance of payment. A record of income and expenditure of the government. B, a systematic record of all transactions, all economic transactions between resident of country and the rest of the world. Right? C, a record of only trade in goods. And D, a statement of foreign exchange reserves. So when we talk about the balance of payment, it is not limited thing, limited to the one government, limited to the only trade in goods, or limited to a foreign exchange reserves. It is limited to the, it's not limited to the, okay, it is the transactions between the residents of a country and the rest of the world. Correct? So that is why option B is the exactly correct answer. A, C, and D, these are the limited transactions. See, BOP is comprehensive record of all economic transactions like goods, services, income, uh, transfers, investments between residents of a country and the rest of the world in a given period. Correct? That is called your exact BOP. It includes current and capital account. We have already discussed the current account and capital account in the theory session, right? If you have not watched the theory session, go to the description box. I have provided the link of the lectures, previous lectures. Watch those videos as well. In terms of other options, ACD are too narrow or maybe unrelated, right? In the theory session as well, we have discussed how BOP is calculated. So the things which are necessary to calculate, okay, the factors which are included in the calculation of BOP, we have discussed. Clear? So current account, capital account, finance account, reserves are all the things, how reserves are calculated, right? And what is the connection of a reserves with the BOP, that you will understand in the theory session. Next, which of the following are components of current account of a BOP, right? Merchandise, export and imports, services, which is invisible, then unilateral transfers, remittances, and foreign direct investment, which is called FDI. Okay, we have already discussed FDI as well. So right answer is option ABC. Okay, see, FDI is a part of capital account, not the current account. Current account, that means the transactions of goods, services, income, unilateral transfers, right? These are considered in the current account, not in capital account. Capital account में क्या करेंगे? FDI, right? Next, a country is said to have BOP surplus when imports exceed exports, total capital inflows exceed outflows, forex reserves decline, or there is a deficit in the current account. So when total capital inflows exceed outflows, then we will call it as a surplus, BOP surplus. Understanding? When income, that means your inflow, okay, these both are more than outflow, okay, then we'll call it is a BOP surplus. Clear? और इसका उल्टा कर दो, when outflow is maximum, okay, when outflow is maximum or outflow is exceeding the inflow, that time we call it deficit. Okay, BOP deficit, right? BOP surplus means the country has more money flowing in than flowing out, usually through net capital inflows, right? A and D indicates deficit, not surplus, and C implies forex reserves are falling, all right? A sign of a stress, not surplus, not exactly defining the surplus. Okay, next. Which of the following transactions are included in the capital account of BOP? FDI, FPI, ECBs, foreign aid, imports of goods. Right answer is option B. That means A, B, C, not D. Okay. See, the capital account covers FDI, FPI, external borrowings, NRI deposits, and foreign aids. Okay, imports of goods are a part of current account, right? So only A, B, C are correct here. See, I think here current account में क्या include होता है? Goods, right? And it is this is the question which is asking about the exact the thing, imports of goods. No, it is not considered in the capital account, it is considered in the current account. Okay, next, what does a persistent BOP deficit indicates about an economy? Strong foreign investment inflow, currency is under depreciation pressure, high export competitiveness, possible decline in forex reserves. Right answer is B and D. Okay, when currency is under depreciation pressure, one of the reason to indicate the deficit, okay, and possible decline in forex reserves, right? These are very important things to indicate the deficit. All right, a persistent BOP deficit suggests that the demand for foreign currency is higher, leading to depreciation of a domestic currency, possibly draining the forex reserves. Correct. A and C are incorrect. They would improve BOP, not worsen it. Correct. Like strong foreign investment inflow, obviously it will increase the BOP. Then we have high export competitiveness. Export competitiveness is more, then obviously inflow will increase, right? When inflow is increasing, how we call it deficit? It is a surplus. Correct. It leads to the surplus, not exactly we call it surplus. Which of the following statements are true about the relationship between BOP and exchange rate? Very important. Okay, very important question. A, BOP surplus leads to appreciation of a domestic currency. B, a BOP deficit may lead to devaluation or depreciation. C, exchange rate movements can affect trade balance. And D, BOP and exchange rates are unrelated. Options are there: A and B only, A, B, C, B and D only, or all of the above. So right answer is option A, B, C only. BOP and exchange rates are unrelated, right? These are related, it's not unrelated. Okay, see, BOP and exchange rates are closely connected. There is a big connection of these both. Okay, when exchange rates or currency appreciation depreciation is happening, it will directly affect the BOP. A surplus strengthens a domestic currency while a deficit weakens it. Correct. Also, weaker currency makes export cheaper, improving trade balance. Right. And D is the false. See, these things we have discussed in the theory session. Right. How the exports will be cheaper in a particular country. Okay, and why. What is the reason behind it? Getting it? How the factors of production will be also cheaper, and what is the exact effect of the of those lower labor or lower factors of production. Okay, that all things we have discussed. Correct. Next, which of the following are invisible items in the BOP? Software services exports, remittances from abroad, tourism income, machinery exports. Right is ABC. Okay. Invisible refers to non-physical flows like services. Right? Invisible means services and visible means the goods. Okay. A and C and B also. D, the machinery exports is a visible item. Obviously, it is a good, right? It is a kind of goods, and goods are visible, right? And the question is about invisible, correct? That is why the machinery exports are not considered in that, correct? Invisible form a major part of India's current account income, not the capital. In India, which institution compiles and publishes BOP data? Ministry of Finance, RBI, SEBI, NITI Aayog. Right answer is option B, RBI. Okay, RBI is the responsible body to publishing the BOP data. Reserve Bank of India, RBI, is the sole authority responsible for compiling and publishing India's BOP data on a quarterly and annual basis as well. Okay, Ministry of Finance, SEBI are involved in the policy and regulations but not in publishing. Next, which of the following entries would be recorded as a debit in BOP? Import of goods, foreign tourist spending in India, Indian company repaying foreign loans, Indian remittances to relative abroad. Right answer is option A. That means A, C, and D. Okay, debit entries represent outflows of foreign exchange, such as imports, loan repayment, remittances sent abroad. Okay, B is the credit entry because it brings the forex into it. It is an inflow. That is why. Okay. The BOP identity states that current account plus capital account is equal to 0. BOP always balances in accounting terms. Capital account surplus offsets current account deficit, or trade surplus leads to currency depreciation. Right answer is option B, B and C. Okay. See, BOP always balances in accounting identity. Okay. That is totally correct. Due to changes in the reserves or capital flows. A capital account surplus can offset a current account deficit. Okay, that is also this one, B and C. Is a misleading A option. Okay, option A is a misleading. They don't always sum to 0, and D is wrong. Okay, a trade surplus strengthens the currency. Trade surplus leads to currency depreciation. This is not correct. Okay, it actually strengthens the currency. Yeah, that is why the correct option was only B and C, not A and D. Clear? All right, so thank you so much everyone for attending this session. See you in the next session. Bye bye, have a great day.